Okay, guys, welcome. We're going to get into the charts. I see a few developments telling me that we're short-term bullish, and here's what we got going on. And don't mistake short-term for medium to long-term. In the short term, it looks like the market wants to rally. Here's the Nasdaq futures, and I think the rally's mainly it's just a snapback rally based on the oversold conditions of tech. Tech has come down pretty good over the last couple weeks. So to have, some minor rallies is nothing out of the normal. And here's what we got though. On Nasdaq futures here, we have about 10,910 is some support. This was support on your Nasdaq futures. You can see we had a reaction here, several reactions here. Then we broke down. So this price action right here, this was a breakdown. And at that moment in time, you broke support. Everything was looking bearish. However, yesterday they recovered that, and it was able to recover that breakdown. So that actually is a false breakdown or bear trap. Typically, when you get a bear trap, you get bears covering, and that creates a short squeeze, and you can get a rally out of that. And that's what I think we're experiencing right now. So I see that in the futures. Here's the cues, and this look, you can read a lot of things from this chart, but here's your support right here at about 267.60, somewhere right in that area. Could be 268, but it's a zone basically. And you can see we had a test of it here. We had several tests of it here. It continued to hold. Then we broke. Right here was your breakdown. So support was broken. You did a back test. As I zoom in, I'm showing you each candle and what it means. Here's a back test of that, right up there to that level. And then you failed impulsively with a gap down. So the next day you gap down, sold off. And at this moment in time, this was yesterday morning, this was a very bearish look. Looked like we did a back test, we failed, we were going lower. And that's what I was telling everyone in the charts, what I saw at that point in time. However, they were able to hold that, and really towards the end of the day, they ramped it up and closed it right here at that breakdown level of 267.60. So that was a successful, that could have been a retest of resistance or creating a bear trap. Well, today they gapped it up. And I was watching this to see if it would instantly fail or if it was going to hold. And you can see here each one of these candles, these 3 hourly candles, they dip below the level intra-hour. This is an hourly chart, so they dip below intra-hour, but we're not able to close. So that's no close, no dice. And if you can see that sets us up for a rally. Now, this is an hourly chart. So what do I see? We can rally up to, we have several resistance levels. We've got a level right here at 271.60. We've got a level here at 270. It's about 275, 274.90. Then we got the top of this range, this recent range right up here at 281. And then you've got the back test of the trend line all the way up here at 290, or depending on when we actually would get there. So those are several levels of potential rally targets. I don't know how far it's going to rally. It's really impossible for me to say. If we were going to measure this bearish wedge, see this wedge that I've drawn out? This is a bullish falling wedge. That's a bullish pattern that when you break out, the measured target is the widest part of the wedge, which is about right there. And so you take that widest part of the wedge, bring it down to the breakout point, and that puts us up to a rally of about 275. So that's the measured target of this pattern. So, that would be the area where you could potentially see the sellers step back in. Okay, so rally is in the cards, I think, for the short term. However, that's short term. If you look at the medium to long term, you got to go to the larger time frame charts like the daily chart. Now, the daily chart is definitely a better chart for swing traders. And here's your uptrend line, this green line right here. You can see I got all kinds of lines going on, but just focus on this green one right here. This is your trend line for 2020 in tech. And this has been a very resilient trend line. It's had several tests. It's been validated several times. So it's a very easy target to watch. And we broke that trend. So as I zoom in, here's your breakdown. You've done a couple back tests. So the daily chart tells me we're heading lower. And I think we're heading substantially lower, and potentially, from where we're at down to this, maybe another 20% drop. But it's not going to happen all at once. So you can get short-term rallies, and then while the daily trend continues to make its way lower. And that's what I think we're in right now. The other reason that tells me that this is just a short-lived rally, primarily in tech, it's bleeding into some of the other sectors, but mostly tech, is the dollar. You can see here the dollar. This is a daily chart. Clearly, we've broken higher on the dollar. Now, this is the daily, so you got to wait for the daily close. But here's your hourly chart. We're breaking higher. Look, if this can hold higher, then that's a breakout of the dollar. That sets the dollar for a move up to this 95 zone here. Rising dollar is bearish for stocks, and so I would see that this might chop around a little bit while the markets rally and then continue higher, and that sets and stage the next sell-off in stocks. So I don't see longer term signs that the stock market is going to that this is the bottom basically. I see no signs in the markets that says this was the end of the selling. I just see short-term rally indicators. Oh, and if I didn't point it out, also on the hourly chart, we have bullish divergences in the, not so much on the SPY, but in the Qs. So most of the rally, that's why the rally is taking place in the Qs. But here's your bullish divergences where the momentum indicators were making higher highs and higher lows on the hourly chart, while the price was diverging, making lower lows. The momentum indicators are leading indicators telling you that there's potential reversal. And as price makes a new lower low, then you look for the reversal, which is kind of what we got yesterday. And so it sets up a short-term rally. It's just a rally on the hourly chart. But there's always the potential that this rally creates another leg higher in the general markets, and we even make new all-time highs. There's always that potential. Here's gold. Gold's actually kind of hanging in there. So the dollar's moving higher, but gold's not confirming that dollar move. So gold's kind of hanging in there, just flagging out. Looks like it's just creating a bear flag. It's pretty... We've had a lot, you've got the flag here. Let me get rid of this one because this was just from yesterday, but you're starting to flag out. So, maybe this breaks here and continues down to that 1790 target. I still think that's in the cards for gold. And if you're new to the channel, where do I get 1790? Well, go back here to 2011, 2013. This is a weekly chart. This was major resistance of gold back during the last bull market. Was a 1790 basically. And you can see, and just to point it out, 3 reactions there. 1, 2, 3. This was the overshoot. The reason why you don't count this is it just was overshot. It was just an overshoot. It came back and then it settled in and had 1, 2, 3. The more reactions, the more confirmation. There was no levels here that reacted. So we overshot it. So then here's the breakout from that level. And I'm looking for it to come back in and do a back test. Okay, sorry, I had to take a call. Now, someone asked me to point out Facebook. I don't chart Facebook very often. I've never really liked how it charts. And I've found Apple and Microsoft to be easier to chart and more influential, I guess. They have, you figure out where Apple and Microsoft are going. Ultimately, you'll figure out where tech is going. And Facebook is, you don't need to know where Facebook's going. It's going to follow Apple and Microsoft. But I'll go ahead and look at it. We got here, and I haven't charted this thing up. So the first thing that I do is always look for where's the long-term trend in a stock. And in Facebook, I see it being right there. This is going back to 2014. You can see the trend that we made. However, we broke trend here in 2018, very common across the board with a lot of different things, and we've been back testing. So here was the breakdown here. The Fed stepped in 2019 area, rallied it up. Then in 2020 we broke down again. Fed stepped in, did a full back test right here in Facebook. And ultimately, that's really all I need to know for the longer macro kind of swing trend of Facebook is where's the long-term trend and where are we in relation to that. But you could narrow it down to the hourly chart, and here's what I got on this one. Here's your March or kind of your June lows. I guess it's not exactly your March lows. Your March lows are down here, but this is about your trend line right about there is what I see. So you got the lows, reaction here, reaction right here. This was there's a bear trap right there with a big gap up. And then you have a breakdown, a back test, and a failure. So longer term, I see this thing going lower. Whether there's rallies, back up, there's always going to be rallies within downtrends. I still see the larger trend as down. Potential bullish chart here in XOM. And I know a lot of people see this, and if you take away the trend lines, you just see downward price action. But here's what I see. And again, not longer term bullish, but a potential bullish price move back up to maybe back test this 41 level. And from where we're at now, that would be a good 14% rise. So here's what I see. We have a downward price channel right here on the hourly chart. We've been working our way lower. We broke out right there, and we've been back testing since. So here's a back test, coming in for another back test today. And this back test here, if we break down and do a full back test, it's going to be a divergent low. Look at the momentum indicators here, and you'll see that we basically have bullish divergence. See the RSI, how it's moving up in price while price is moving down. This tells you that there's a trend reversal, a possibility of a trend reversal, and so then you look for the trend reversal. So if we get a back test all the way down here at 35.63, it's going to be a divergent low, and that should set the stage for a rally potentially up to 41. PHM here, and I'm going to wrap up with this one. Here's an uptrend line right there. On the daily, you can see we started to break down yesterday. Here's the breakdown, but they recovered it. So a daily close above that would tell me that that was a false breakdown, and this is just not ready to break. When you look here on the hourly, you can see that price action where it recovered. Now, if it fails here and starts to roll over and we get a nice impulsive red candle, then this really was just a back test and just kind of some fake out price action, and it's actually going to roll over. Again, I think this will roll over. I'm watching for it. We've had divergence in this, but you got to wait for the big, nice, solid sell signal, and we just don't have it yet. So there's a couple ideas out there, again, things are changing quickly, so sometimes by the time I get a read on a market, it changes, and I just want to give everyone what I'm seeing today as of right now, and let the charts dictate kind of where it goes here in the future. Again, my longer term view is still down. Short term, very short term view, potential small rally, and then we continue the downward sell side pressure. Thanks for following along. I'll catch you guys on the next.